Hey, how's it going, guys? Welcome back to mentfx. And something that a lot of smart money concept people, mentors, get very wrong, and even something that retail traders get wrong a lot of the time, is trying to call tops and bottoms. Now, how do we stop that? Well, the first way is to actually follow along with structure. So this is actually something that happened a while back with Bitcoin. If a lot of you remember, or maybe don't even remember, I was one of the proponents of telling you guys that Bitcoin was going to continue going significantly higher. So I'm going to delete what I had on there really quickly. Let's go ahead and open this up and let's talk about what actually happened over the last year. So ultimately, when price was around these 20K levels, right in or around these areas, everybody in their right mind, retail, including dumb smart money, including some very well-known smart money mentors, were talking about how 20K was like the highest that Bitcoin would ever go. And in our mentorship at the time, I even made a video on this at the time, I believe. I'll have to go and either make that public again or something. But ultimately, I was talking about how there is no reason to assume bearishness because there is nothing more than bullish structure being put in motion and nothing more than protected lows being held by the institution. So at the time, we were looking at the structural delivery of this price, and we were basically saying that the next demand zones are going to act as the new areas to continue going long. And as a result, we continue to see that unfolding of price. And we were bullish all the way up, including into the high created here. When this high of 42K was created, again, you had retail, you had dumb smart money, you had many smart money mentors going, well, we were right, it was 40K, that's the high, we're ready to go short, Bitcoin's done. But there was no reason to do that because we understood that the movements coming and creating these highs came from the demand zones that existed at these lows right here. So what's actually happening is you're having invalidation points that are still holding fully. So we can put this on the bottom here, but you have invalidation zones that are holding, which means all you have is new targets being set at the tops, which are nothing more than bullish price action that's going to more likely than not continue delivering to the bullish side. And what's interesting, again, is a lot of smart money was wrong, and a lot of smart money in our group was right as we looked to trade the demand zones found inside of here, right? So you can go and refine some zones in there. You'll be able to find the actual zones that this was fine to tap, but this is the overall zone. And in here, you had that transfer of weak to strong hands, which again, if you have not seen that video, make sure you check it out, and the continued delivery of prices to the top side. Now, as it did that, it continued to deliver it on this bullish structure, and this bullish structure continued to hold all the way through until right here. And at this point, again, you had smart money come in to say, oh, the 65K was the highest, and at this point they were finally right. But the only reason they were correct here is because they finally allowed structure to show them the delivery of price and to show them where the real shifts were going to happen. And at this specific point right here is when we all in the mentorship, and I think, no, I did not make a video about this, but in the mentorship decided that, you know, it's time for Bitcoin to actually go short. And the reason for that is because real institutional structure, which was basically carried by this invalidation point, then this invalidation point right here, then this invalidation point right here, then this invalidation point right here, was finally broken and created an invalidation point at the top of the market because it's now shifted for real in the bearish direction on this daily time frame. So now all of a sudden the invalidations become on the top side, and again the market targets became the bottom side of the market. And as they were met, we began to put in new invalidation points with new final targets, which were again met. And as those were met, we put in new invalidation targets as well as new final targets, which, by the way, are still bearish. So whether this market doesn't want to hold this specific supply zone right here and wants to actually continue higher is not our prerogative. We're not here to make up a random assumption about the fact that price may want to go and take out this liquidity. Instead, what we do is we follow what is given to us. Allowing yourself to assume that this is ready to go bullish is the same reason that most smart money and most retail was completely wrong about the highs at 20K. And all this money right here was money lost on the up move because a lot of them had already begun to force the bearish stance, even though it's never happened. Same thing is going here. Right now, there is no reason to force a bullish stance. It does not matter how bullish and impulsive this is. What matters is that the most recent price delivery has delivered to the downside, has met new final targets, and created new points of invalidation. And the most likely probable move of smart money and the people that are actually moving this market is going to continue to be holding the specific highs found at this high here and continue to deliver to new liquidity points found at these bottoms here. We've had this area of interest since forever in the mentorship. We've been looking at it to go short for a while, and already if you had gone short, there is great profit to be made in this move down. And now as you're partial or even broken even on this trade, the likelihood of this is significantly higher again than this. Now that's not to say that it cannot deliver to the top and begin to invalidate and then our buys can switch, but the point of this video is to show you that your buys should not be switching until the points of invalidation are actually hit. What people like to do is they like to force a bias, they like to force a high or a low and begin to try to load up on it, trying to call the very low of the market or trying to call the very high of the market. There's no point to do that. Instead, the best thing to do is actually follow along with what price does and how price delivers. So if we go ahead and go to the mentfx trade ideas and just scroll up, if we can go ahead and find Bitcoin somewhere here. So we'll go ahead and look through all of this. This was a while back because this area of interest has literally existed forever, and there's been I've been looking at a lot of stuff over the last few weeks that hasn't been Bitcoin. But if we just go ahead and keep scrolling through all of this, this is some weekly study stuff. Keep going through most of this. I think this is actually it right here, right? Okay, cool. So we have a Bitcoin USD chart right here. I had a few more of these sent out, but ultimately you can see that we've ever since this breakout structure right here and this delivery of this low here, we've been looking for price to get back up into this supply zone right here and continue to deliver to the liquidity lower. Now on the way, we were looking for buys inside of zones here, which by the way, you can now take a look at. Delivered perfectly. We did have price come back into those zones as we wanted to see those buys come back into those zones, into the demand zones created as this price came up. And again, if you haven't seen the previous video, check it out because we speak about the idea of having an area to sell at and an area to buy at and allowing for price to not emotionally get you involved until it either taps your area to buy or your area to sell. And then you're able to deliver and look at a buys to deliver perfectly. So as price gets into this area, we get those beautiful buys up as we were looking at in, I don't even know, on the 9th, 0709. So literally about a month ago, we were looking for price to get up here from these areas here, come up into there, and then keep on selling off. And that's exactly what price had done. I think the original motive was to look for it inside of here. There were a lot of buys in there. You can see there were about 4 or 5 days of some bullish price action till it came a little bit deeper, which is fine. You have multiple demand zones in certain areas, which is very normal. But again, what's happening is people are already starting to force the bullish hand without allowing for the bullish hand to present itself first. Now, if this area did not want to hold and we saw prices kind of come right through it, or even now after holding and giving you whatever profits you may have made already on this move here, if it comes higher, then we understand that our invalidation points are hit and we can begin to switch our bias. But until a market becomes bullish or becomes bearish, there is no reason to assume it, right? Allow price to do its thing and create biases around price, but do not force stories that are not existing. Just like many smart money entities and many smart money traders and many smart money mentors look to force the assumption of this 20K high, and we're wrong. Look to force the assumption of the 24K high, it made it to an institutional number, and we're wrong. Look to force the assumption of, again, the 42K high, and we're fully wrong again. Look to force the assumption of a 50K high or a just before 60K because it never hit it, and they were wrong. And look to force the assumption of a 62K high, and they were wrong. And then finally force the assumption of a 65K high, and we're finally right. But this right here was about, I mean, we can take a look at that very simply, was about 134 days. So about half a year, a little bit under half a year of being wrong. And that's not what you want to be doing. What you want to be doing is allowing price to create points of target and invalidation for yourself. And this will happen across all time frames. So on this specific time frame, if you're looking at the structured delivery, you need to understand two very simplistic things. You have one point of invalidation, which has moved on its way down, right? Invalidation right here, target. Comes up, gives you a perfect entry off of the supply zones inside of here, off of the fulfillment of imbalances. And by the way, if you still don't know what they are, imbalances are nothing more than empty space between a wick and another wick, just like that. So we understand this came to fulfill that, hit the supply zones up in this area, which we'll be able to see on most likely a 3-day chart. There you go, right there. Maybe a little bit of a higher chart. We'll go to 5-day or something like that. You can take a look at that, right? So there you have the supply zone being tapped in by that market, but ultimately you'd be looking at that fill of the imbalance, which is why price is doing that, and the continuation lower, which you're still looking to confirm on those lower time frames, because as you know, there's tons of structural confirmations, which you can see beautifully, that moves back into the supply zones. So if we just zoom in on that, you can see already the confirmations here. If you're in the mentorship, you can clearly see what we're looking at here. If you're not, feel free to join. Otherwise, keep on using the free stuff and keep taking notes. So, and then we have that delivery lower. Now, ever since that delivery lower, there's no reason to switch your bias from seeing this as an invalidation point and this is a final target. Now, again, this may not hold. And it may go and take it out. But at that point is when we can finally look to potentially switch our bias. Until then, there's no point to do that, because it's going to create more times that you are wrong than you are going to be right. Do not force any moves. Do not force any locations, whether you're retail or smart money. You need to have a point of invalidation and a target. Either my target is met and this invalidation becomes a new area, or my invalidation is met and I can finally switch my bias. It does not matter how price is moving into an area, right? All that matters is that price is holding its previous points, and that's what you want to look for. Now, as you get to lower time frames, you're going to see the opposite, and you're going to see areas where you can actually very nicely trade the opposite route. So if you're actually following the structural delivery, which could be a higher high, a higher low, a higher high, a higher low, a higher high, a higher low, you understand that this break of structure right here on this lower time frame creates the same identity for you, creates the same environment where you have a low, which is considered an invalidation point. So ultimately what's happening here is you're having a low that basically says, if this low gets broken, my bullish structure is being fully invalidated. By the way, we'll go and find the actual structure here. There it is, right? Here's your bullish structure. And you can go ahead and label the high right here as your overall final target. Now, again, very simply, you've created for yourself on some time frame a idea about what price is going to do, and then again you can go and find your demand zones, which you clearly understand can be your last down moves before the up moves, right? Just like that. And now you have areas to look for buys from. And on lower time frames, as you all have been here to understand and learn, you are going to have the time frame structure shifts in there that you can look for easy buys off the last down moves before the up moves that you can then take to the top side, as you understand. But the idea behind this is, again, this exact same approach on this 5-minute chart, or that 1 hour chart, because it's also a 1 hour structure, as you understand. Wherever that is, there it is, right? Is the exact same approach that is being delivered to you on this daily. If the daily is still holding its invalidation point here, there's no reason to assume higher prices until those prices deliver. That is, assuming it is going to create elements in time where you're going to be wrong significantly and many times. And a lot of actually good smart money educators were fully wrong on Bitcoin multiple times for this reason. The same thing goes with US 30 and US 100. For a long time, people have been trying to call the tops of them, whether they're smart money, whether they're institutions, whether they're retail, whether it doesn't even matter who it is, whether it's news, right? Now, the fact of the matter is US 100 and US 30 were holding a bullish structure. And as they're holding that bullish structure, they continue to hold it. And there was no reason to assume otherwise if that bullish structure wants to hold. Whether that bullish structure looks like this, or whether that bullish structure looks like this, there is no difference between the two. They are still delivering higher highs and higher lows. There are still protected lows being put into place as that bullish structure is delivered. Therefore, there are invalidation points that are continuing to hold and should not be changed unless those invalidation points are traded through. And that's the same idea behind this daily chart right here, and looking at how you want to target and where you want to use points of invalidation. It's the same thing as using the inside structure to look at overall breaks, to look at targets, to look at invalidation, and allowing price to play for that. You can do this on any time frame. You can get down to 30 seconds and start playing around with that if you so wish. It's the same thing, but ultimately you got to understand that as you have the 30-second breaks of structure, so you have the higher time frame structural bias being delivered to you, higher time frame being delivered, and then that finally shifts. So you understand that now your bias has shifted to having whatever demand zones are left up here, which, as you can see, would be this with the imbalance here. You could have also potentially used this one here, but those have created some equal highs. So anyone that has studied liquidity for a while understands why I'm using this zone right here. Ultimately, you have this break of structure down, and again, all you've put in motion is a potential invalidation point at the top, and you've put in a area that you want to target at the bottom. And very simply now, you have a short-term bias that you can allow to be traded. So during the day, you can even see how there's bullish structure that you can take into that market, but you already understand how this bullish structure, where it goes lower high, lower low, higher high, and you have an entry here, higher high, and you have an entry here. You understand that you understand why this breakout structure here is not supporting a move to the top side, because it's being met with a counterparty push of the higher time frame bearish trend, which is now holding on this higher time frame structure. And if you're a little bit confused, make sure you check out my previous video on structure. But ultimately, price is tapping into the supply zone right here, and as we all understand, our invalidation points are still at the top here, and our final targets have become here. And again, there is no difference between this 30-second expectation of price now delivering to the lows, as there is with the 1 hour expectation that price will now deliver to the highs off of the invalidations, as there's no difference between the daily expectation that price will continue to deliver to the lows. Despite the fact that it's been super bullish and super impulsive, does not really matter to us. What matters to us is what bias we had, what story we wrote, and what structure is presenting to us. And as long as that structure on a smart money basis with the protected highs and protected lows, which you can go and check out in my other video, is holding, then there is no reason to shift your mind. Now, if you want to get deeper and you want to take your knowledge to the next level and you want to have a structured course and perspective on this, make sure you join the mentorship. The link is at the bottom right here. Otherwise, thank you for the support. Stay tuned for the prop firm coming out soon. And as I move into my new house and set up my new office, I'll be able to start being more consistent and start to take this channel in a much more interesting direction. So thank you so much, guys. Appreciate it. And I'll see you next time on mentfx.